So this video is just a little bit of a insight on what makes the market move. It's difficult to explain what makes the market move, right? Because you could ask 10 different traders and they would probably all tell you a different answer, which is kind of silly. But here's the breakdown of the markets, right? At any given time, thousands of people are buying or selling orders, which is what makes the market move. So for anyone to come on here and tell you this strategy works 100% of the time, or my algo bots work 100% of the time, they're lying to you, or they're over exaggerating to you. Because again, at any given moment, thousands of people are entering trades, are all hitting the buy button or hitting the sell button, which is what makes the market move. Now, obviously, when a hedge fund or the big money enters in a trade, it's a much bigger candle, which really kind of propels the market. But at the same time, there are multiple big contracts, there are multiple whales, right, is what I call them, the whales, the hedge funds and stuff. So they all have to be in alignment too for the market to move. But what I'm getting at is the market is very random. Okay, the reason we are able to make strategies and we are able to do things is because we're also habitual creatures, okay? So whenever we all see a habit, or whenever we make a habit, right? Let's say we always enter the market at 11 o'clock and it makes us money. Well, if it makes us money at 11 o'clock, we're going to enter that market every single day because we are creatures of habit and because we like the dopamine rush and we like the profitability of making money at 11 o'clock. So then every day at 11 o'clock, we enter our trade and we make money. And so does the rest of the world. We all buy at 11 o'clock, it goes up, right? But it doesn't happen that way, okay? But we are creatures of habit. So instead of just at 11 o'clock, now we say, okay, we only take a trade at 11 o'clock if the market has been green all day and it's going up. Now we're creatures of habit. So then we only enter trades at 11 o'clock when the market is going up. And this happens over and over and over. But that's what makes these strategies work, because we're creatures of habit. Okay, so number one that you need to understand, the market is relatively random, right? Because in order for the market to do the same thing over and over and over, everybody has to buy or sell at the exact same time over and over and over, which is not realistic. But because we are creatures of habit, because these big hedge firms and everything else have systems, and AI bots have systems for when they enter trades, we can use those systems and we can get our little piece of the pie from them. I hope that makes sense. Okay, so number one, markets are random. Everybody is either jumping on or getting off the train, but the train is always moving because of sentiment. So like when news comes out, it moves. If the good news comes out, it goes up. If bad news comes out, it goes down, because we're creatures of habit and we want to get in and we want to make money. Blah blah blah. Okay, but this is going to be going over the power of three. So the power of three, understanding market structure. It's a comprehensive analysis of market structure through the lens of the power of three framework, revealing how markets move through predictable phases of consolidation, manipulation, and expansion. And this is basically going to give you a deeper insight on what makes the markets move. Again, though, mostly all three are theoretical, but you see it every day. And when you see it every day, it becomes less theory and more reality. Okay, here's the agenda. Introduce power of three, consolidation phase, blah, blah, blah. Okay, so what is the power of three? The power of three is a market structure framework that identifies how institutional money moves through financial markets into three distinct phases. Number one, consolidation, accumulation of position in a sideways market. So this is when the market goes sideways. This means consolidation. Whoa, big face. So consolidation is basically when the market is consolidating, just means they're taking entries before a manipulation move, and a manipulation move is typically in the opposite direction of the trend. And there's a lot of speculation as to why these moves happen. Okay, it could be fair value gaps. The market makers have to get more contracts before they can do the move, so they pull it reverse, and they get all these contracts, and then they reverse it. It's basically strategic price movement to trigger a real-time stop. So like whenever they're in these consolidation phases, right? Whenever there's a consolidation, there's a lot of up and down movements, and that means that on the top and the bottom of this consolidation zone are a lot of stop losses. So typically what happens is the market makers, before a big move happens, is they hit all those stop losses, and then they go on to the next phase, which is expansion. All right, so this is what the power of three is, though. It is consolidation, manipulation, expansion. I hope that makes sense, and I'll show you on the charts in just a second. Understanding this cycle, though, helps traders identify high probability trading opportunities and avoid common traps set by institutional players. Consolidation phase, building the foundation. So key characteristics. Price moves sideways in a defined range. This is what a consolidation phase is. Volume typically is decreased. And the mindset for these consolidation phase is real small scalps, or just do not diddle in the middle. All right, whenever we're in the consolidation phase, that's when you just get chopped up, and that's when you blow most of your accounts, unless you know what you're doing, or unless you can trigger to yourself, okay, this is a consolidation phase. I'm just going to take little short chops, and you can still be profitable scalping that way. But usually the volume is low. This is where the algorithms really kind of just chop you up. They really kind of target your stop losses and kick you and get you out. So it's not a good idea to trade during these periods. But it also forms a level of support and resistance levels. So on the top we got resistance. On the bottom is the support. So you'll see the market will hit the support, won't be able to break through, then it will go back up, and then it will hit this another form of resistance, and it will just continue that way until finally we break out and we have a big move. What's happening behind the scenes, institutional traders are accumulating or distributing positions without significant moving price. This phase represents the loading period before a significant move. How to identify price contained within a channel, multiple tests of support and resistance, decreased volume, narrow Bollinger Bands. All right, manipulation phase. The manipulation phase is that big wick that just kind of goes out. And really, guys, listen to this. I have had this profound thought multiple times, and it's made me a lot of money, that the market really just goes from manipulation to manipulation. And if you can catch these, this is how you can make some big money before the big move, okay? So, manipulation phase. During the manipulation phase, institutional players execute strategic price movements designed to trigger retail stop losses and create liquidity for their larger positions. So you have to understand, you cannot just enter $1,000 into the market, because then you'd be able to manipulate the price, and that's illegal. So what they have to do instead is they have to enter in and at these little moments so that they can get in before the next move. So they buy 100 here, 200 here, 400 here, 500 here, and then now they're fully in their position. But in order to get those, there has to be contracts available. There's only a certain amount of contracts available at any time. In order for somebody to buy a contract, somebody has to be selling a contract. Hope that makes sense. But again, when we're in these consolidation zones, a lot of stop losses build up at the support and at the resistance. So whenever we see the manipulation is usually triggering those stop losses so that we can get some more contracts so we can make a move. You get it? I hope so. All right, false breakouts. A false breakout usually is a return to the mean or a sign that expansion is coming. Okay. Stop hunts. Sharp price movement designed to trigger clusters of stop losses before reversing in the intended direction. Liquidity gap. Quick moves into area of high liquidity where many orders are placed to fill large institutional positions. The manipulation phase is the psychological warfare phase. It's where you think you're about to make a bunch of money and then it goes whoop and it's gone, right? So you got to watch out for the manipulation, but after the manipulation is where we can start to look for an entrance, okay? Or on the manipulation if you're really clever. But usually it's after the manipulation because it's hard to tell right away. But sometimes the manipulation is just so blatantly obvious that that's when you want to look for your next stop to get in for the expansion phase, okay? Common manipulation patterns, you'll see wicks beyond key levels, a V-shaped reversal. This is where you see it go boom and then it reverses right back down. And that's a designated sign that this is a manipulation. Retail trader mistakes, placing stops at obvious levels. An obvious level could be a rounded number. It can be London high, London low, Asia high, low, hour, the IBL, so on and so forth. Okay, so overnight gaps. Also, gaps are always usually filled, so that's always a good way that you can tell. Okay, the expansion phase. This is where you make most of your money. During the expansion phase, if you just wait for the expansion phase, if you just have patience, you'll be able to almost always tell we're in an expansion phase. A consolidation and the manipulation is typically the expansion phase. All right, this is the true move that I was trying to make. After manipulation has run its course, the sufficient liquidity has been captured, the market enters the expansive phase, where the true intended move unfolds. This phase typically shows strong directional momentum, increase in volume, minimal retracement, trend continuation patterns, and expansion phase represents the payday for institutional traders who accumulated positions during the consolidation and improved their entries during manipulation. I hope that makes sense. All right, expansion phase profit-taking strategies. Entry timing. The ideal entry occurs after manipulation is completed and the first signs of expansion appear. Look for a break of manipulation structure, strong close beyond key levels, increasing volume on breakout candles, shift in market sentiment indicators, position management during expansion. Consider trailing stop behind the swing points, potential profit taking as measured at measured move targets, adding to winning positions on pullbacks, monitoring for exhaustion signals, recognizing the end. The expansion phase eventually ends with decreased momentum, extended moves from key moving averages, climactic volume spikes, return to consolidation behavior. All right, so key takeaways: mastering the power of 3. Patience is key. All right, especially during those consolidation phases. Those consolidation phases are a pain in the butt. All right, the most profitable traders often come from waiting through consolidation, avoiding manipulation traps, and capturing expansion phase. Multiple time frames. Apply the power of 3 framework across different time frames to identify nested patterns and confirm high probability setups. Risk management. Place stops beyond the manipulation zones rather than at obvious levels. Size positions appropriately to withstand volatility during the manipulation phase. Continuous learning. Document examples of power of 3 in your trading journal. Review past trades to identify where you have fallen a victim to manipulation. Understanding market structure through the power of 3 framework. Transform you from being market prey to becoming a predator aligned with institutional moves. Money flow. All right, so now let's actually take a look at power of 3 on the charts. The easiest way to see consolidation, manipulation, and expansion is going to be on the 4-hour or the higher time frames. I think the 4-hour is probably the best. Maybe the 1 hour would be good too. I mean, these are all. I mean, we're in a bullish market, right? So we'll just randomly start here. All right, so we have this downtrend, consolidation, down, consolidation, big move down, manipulation candle here. And this is what we're talking about. Manipulation is just a giant wick that comes up, and then we have this next move up. So manipulation, expansion, consolidation, manipulation, expansion, consolidation, big manipulation candle, expansion, and then we have the consolidation and then the reversal, right? And you can see the manipulation candles are very large candles after a big move to the downside or upside. So you see this, and between this range there's also manipulation candles like here before we have this move up, right? So we had this big drop, manipulation candle up, and you can see we had that happen. So this is what we're talking about though. Okay, so the market is always in these little phases. Okay, so this is a 4-hour and a 5-minute. And we're just going to kind of go from whatever this is, Thursday, and we're going to look for consolidation, manipulation, and then expansion phases. All right. So we've been in a consolidation phase here for a while. Like you can even see it right here, right? Right there. So we had this big consolidation phase, and then we had this big breakout up here. And you can see the manipulation candle, boom, tried to go higher, rejected, came down here, formed this support, tried to go up again, and you see how where the manipulation was now became the resistance, and then we had a big breakdown on an expansion there. We're going to come back into that room, that little zone, boom, rejection, manipulation, all the way back. All right, here's a good example. There's a good one. Well, except for this was a Friday, but on the 5-minute, you can tell right here, this was a consolidation. We missed kind of the manipulation. The manipulation was this big green candle right here, where we kind of came down, and then we reversed, and then it went back up. All right. Then we had the big expansion. Now we're in another consolidation little phase right here. Asia range. A lot of the expansion happens during the Asia range too, just because like not as much liquidity is happening there. So here's another example. Literally the entire Asian range was the entire Asian range was consolidation. So you see here, didn't really have a manipulation though for our breakout, but that was a big consolidation phase. So then if we come back into the consolidation and we bust out, that's what we look for a lot. All right, let's see though. Boom. Absolute carnage. Crazy expansion. So we went from one consolidation range to another consolidation range, which was in London. Again, not a ton of manipulation other than at the open, we just absolutely took off. But then you see here at the top, we've had this big candle. Let's see if it reverses. So then right there is another period of consolidation. And we had this manipulation right here and right here where we basically tried to break out and it reversed on us. And then we have the expansion. Not a lot of manipulation for the breakout, but you can see we never even made it back up to retest this. Asia range again is a very large pocket of consolidation, as well as London this is a big consolidation range. This was also a manipulation candle to the downside. You see that? So we got consolidation, manipulation. Let's see if we get an expansion. More consolidation. And now we're probably going to see a real big move to the downside. Boom, 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 boom. Okay? So we had this huge range of consolidation here. And you can see every time we pretty much hit these areas, we bounced off of them, right? We never really broke out of this range that we had. So Asia, London range, big range. Finally have a little bit of manipulation trying to go to the upside. False breakout down to the downside. Expansion all the way from here to here, right? But you see how it goes in phases, right? Consolidation, manipulation, trying to break out, trying to break out, trying to break out. Okay, we can't break out. Downside. And it's a lot clearer on the, right here on the 4-hour that the manipulation happened right here at the New York Open. We had this huge candle up. Twice we tried to break through. Twice we got rejected. They manipulated one more time. So manipulation from the open. Boom! Couldn't break through. Tried again. Probably got all these stops. Probably we're accumulating shorts right here. And then finally the market gives way. Boom, big move down. Again, you can see we formed two manipulations here. So we had this big manipulation candle. Then we have this manipulation candle. So now we should have a move. Not quite. Sideways, choppy summer day. So that was pretty much just a sideways day. But we're having this huge range of consolidation. And then we should get a big breakout of expansion here shortly. Boom, boom, and that's all she wrote. Cool. So you see though, we have this range right here now becomes resistance because, and we'll see if we break through this, then we're going higher, right? If we bounce off it though, and we have a manipulation candle, we're going even further down. That was a big manipulation candle right there. Large expansion to the upside. Crazy. Really, if you zone out, like this whole area from like all the way over here to like here, this is all a consolidation. So we had this big move up, big move down, expansion, consolidation. Now we're going to get a big move to the upside. But then again, that's all-time highs, so we'll see what happens here. Manipulation. This is another kind of consolidation channel. right? And we have this big expansion downwards and then a reversal. Expansion. Now we've hit the resistance of the last channel. Consolidation. This resistance channel is holding strong. Boom. Expansion. Back into this consolidation range. Did not break out of it yet. Manipulation. Expansion. That is the power of 3. The power of 3. All right. I hope you guys are seeing how the market does this, how it consistently is going from consolidation, manipulation, expansion, and it's just good to know, right, what's happening. Sometimes it's clear as day, like this big move. Other times, it's this, right? Look at this. This is perfect. This is a prime example of consolidation, manipulation, expansion. Boom. And sometimes they do it twice. Sometimes they have to accumulate a lot before they can move up, right? And then this little area now becomes resistance or support, whatever the hell it is. Blam. Stuck in the range. Manipulation. This now becomes resistance. We don't break through resistance. Consolidation. Boom. Oh, manipulation. And then expansion. Another manipulation. Consolidation. Boom. Expansion. Sort of. Anyways, that's how it works. Power of 3. So always be looking for, on the higher time frames, what phase are we in right now? Are we in a consolidation phase, or are we? Is there a manipulation? And at all time highs, it's kind of hard to determine what the hell the market is going to do. We're just really locked in this channel though. So the longer the consolidation, the bigger the expansion typically. Expansion. Back into the consolidation room. This has been a very sideways summer. Manipulation, expansion, hopefully. Might be to the downside even. Manipulation right there. Expansion. Blam. Cool. Alright, I think you get the gist though. Power of 3.